Welcome to Wimer's Wilderness. I'm your host, George Wimer. I have 30 years of volunteer work, community organizing, and 16 years in local government, 12 of those as mayor. Wimer's Wilderness is an informed look at politics, community, government, environment, and education from a local perspective. Today we're joined by Keith Dragisich. He is the Vice President and Chief Development Officer of an institution that many of us probably drive by every day. It's a community bank, and I'll have him kind of introduce himself and tell us a little bit about his background and where he's developed his career and what he does from a day-to-day standpoint. We're just going to have a conversation about community banking, which when I was growing up, we had a local co-op. I grew up on a small farm, so we had a farmers co-op, and even though there's been a lot of consolidation, I think, in places in banking, community banks are really something that helps a lot of our smaller towns and cities. So, Keith, why don't you take it from there and tell us a little bit about yourself?
Well, thank you, George. It's great to be on your program today. I've been in community banking, and actually in banking in total, since 2003. Graduated college from Bemidji State University, and then transitioned into the Twin Cities market for a career. Started with most people in banking did is at one of the larger institutions in town, Wells Fargo, and kind of build my credit knowledge in there and kind of cut my teeth in auto loans and more or less the subprime market. When I discovered that what I really wanted to do was get into business banking. So at Wells Fargo, we had different pathways to get there. I immediately applied back on my home area of the Iron Range in Virginia, Minnesota, and got into a business banking trainee program that they had established. Spent 3.5 years really cutting my teeth in there and going through their commercial credit, understanding how they do business with lines of credit, SBA lending. Was promoted from a $5 million portfolio up to a $15 million portfolio up in International Falls. So I spent a year up in International Falls, and then I decided it was time to come to the Twin Cities and go to the community banking route. Moved to Cambridge area and started with a community bank down there as an assistant vice president. Really got back to the basics of banking. At Wells Fargo, we had a lot of systems in places and a lot of silos that took care of a lot of the process. At the community bank I was at in Cambridge, you were doing more of the hands-on approach, and you were making more of the decisions than you typically would. So the experience level just got accelerated. So 8.5 years of 5 years as management of an office and still doing a commercial lending portfolio really trained me really well in the community bank world. I then took a promotion to another bank, a community bank in the Twin Cities, and really got accelerated my career even farther. Now I started as a vice president of commercial lending, but now I took on the role of vice president, chief development officer, which not only now do I do a commercial lending portfolio and meet with clients on a daily basis, but I'm also involved in things like revamping the website, training employees, kind of coming up with the retail and business strategy going forward. So it's exciting times. It's been a long, very, very rewarding career to be in as banking.
What kind of got you interested that you wanted to get into banking and coming from such a beautiful area down to the Twin Cities? I'm telling you, it would be hard for me to kind of give up those great views every single day up there in the Northwoods.
George, I was working for a insurance company out of college, and I realized I was in a bank, and I'm like, geez, they seem to be a lot more happier. And, banking seems like a great position to transition to. And I was not really liking the insurance industry. Mm-hmm. So I immediately applied there, and I was hired, I think, and probably got hired pretty quickly into banking. And I never left. I never thought I would be a banker. I never pictured it. But when I got to business banking is when I fell in love with meeting with the business owners. The industries that I see, I've seen everything from construction to manufacturing to buildings that you drive by that nobody knows what's in there, but I've been in there. So that kind of excitement and hearing the stories of entrepreneurs really gives me the as far as the motivation to continue being in it.
Yeah, and I love that point, because one of the things that I love doing when working economic development when I was mayor of Isani is that you get to meet with people who have great stories. I'm always impressed with that entrepreneurial spirit, somebody who's taking, that risk and willing to kind of put it all out there and saying, yep, my idea, my dream, this is going to work. We're going to make it happen. And then just hearing how they've been able to do that. And granted, it doesn't work every single time. There's obviously risk involved, but it's just really impressive to me, because those individuals, I don't know, to me, it was always uplifting to go and have those conversations.
You're 100% right. It's taking the entrepreneur that walks in your office and you start with one building loan and they're just getting started. And now you're doing, a few years later, you're on their second location and they're talking about how they want to build this empire across the Twin Cities. It's amazing to watch them grow, and you're growing with them in your career, and you're seeing, and they're feeding off your energy, and you're feeding off their energy to hear their ideas, and you're giving them ideas on financing and SBA loans and all the things, the mechanics of what banking can do for them and improve their, as far as operational and as far as their lending needs, to help them grow along the way.
Well, it was a banker who actually helped make my career in the Twin Cities. I was hired by a manufacturing company, electronics manufacturing company, and they had some great products. They had a great customer list: Guidant, Medtronic, Cummins, to name a few. But they were terrible at managing money. I mean, they made a great product. They knew how to do that. My first paycheck bounced from this company.
Oh no.
And so I went in, I got their cash flow figured out, just a bunch of differing nuts and bolts kind of things. And I went with it was a partnership. And I went with one of the partners to a meeting with their banker. And, I showed him what I had come up with, all these different things. And he goes, and Lyle was the one owner. He goes, "Lyle, you need to keep him or you're not going to have your line of credit." And then
I love it.
And I was like, okay, I couldn't have asked for anything better. Right. And It worked out great. We got them turned around in about 6 months, and they actually sold about 2 years ago for $50 million to a British company. But it was, so community bankers and bankers in general can, sometimes I think there's, perhaps a negative perception at times, but they are a partner in building businesses. They are, obviously they want their investment to have a positive return, but it's amazing. And that was my first kind of, experience with that. And then obviously, being in government and working with a number of businesses, and then, a number of banks that we had and credit unions that we had in town here, it really opened my eyes to what you guys do. I mean, I'm just amazed at what kind of a partnership can develop there.
Yeah, and it really takes the time to really educate. You have to spend some time in the industry to really get educated, and you have to look at it. It's not a black and white. There's a gray area. You need to be able to, as a lender nowadays, and throughout my career, you have to look at everything. You have to break it down. What's going on the personal side? What's going on the business cash flow side? And how creative can we get? And think outside the box. Mm-hmm. And I think that's what it takes to lender. If a lender just looks at one angle and just looks at the business numbers and doesn't look, well, what can we do on the personal? You're really missing out on having a great banker as a partner in your business, because they can at least give you the advice and the structure of the loans that are going to help the cash flow. And they're going to anticipate maybe looking at what trends are coming down the way. What's your gross profit margin in the area? It looks like it's going down. Have you figured out why? Well, no. Well, let's kind of dig into those numbers and kind of poke around and see if we can kind of decipher that. And sometimes it's just the lack of business owners being on autopilot, I call it, on their loans. Sometimes they're with a bank and the rates are too high, or maybe they've been paying on a credit card. They started the business with $30,000-$40,000 in credit card debt, and it's at 18%. Well, those payments could be pretty high. Right. Maybe it's restructuring that to get them to a rate that makes sense. Actually, they can get ahead, because too often you see that happening where they rack up a bunch of debt, but they don't really have a plan to how to get rid of it.
Mm-hmm. Well, and the thing that I found interesting too is that the banker oftentimes, they'll have, their portfolios that they're dealing with. They might have other businesses that are in, similar complementary business areas, and they know some of the business trends, and they can help you out with that. They can say, okay, well, you should be at this margin, or you should be at the, whatever. And it really helped me establish, because my background before I'd gotten involved with this manufacturer was in finance, and there the numbers are quite a bit different. But with this manufacturing business, some of those marks that I had thought were ones that we should be hitting, the banker was actually able to help me, as they had, quite a few businesses in relatively the same kind of market. So it is really a positive relationship. So as you've been going along, and you've been doing this for, a number of years now, what do you think has really changed? When I took over as mayor, we were just, starting into the Great Recession, unfortunately, and then we had a lot of changes go through that, and we've had 2 decades here where we've seen some pretty deep lows and some pretty high highs.
Yeah, from a technology point, when I started in banking, from what we're seeing as products and what customers are demanding right now is remote deposit. The ability to make mobile deposits has really changed as far as the community banking. Mm-hmm. It's one of the most stickiest products in banking, having a remote deposit for commercial customers. And it's allowing community banks that we don't have, we're not on every street corner. And, and banks right now, are closing more locations down because of technology advances. So you're seeing, I can have a customer in Cambridge that I might be 50 miles away that are still going to be able to bank with me just because how the technology has improved. We're seeing that being a huge time saver overall. We're seeing the aggregate accounts where before you didn't have like a mint.com and those kinds of things, right. Those types of sites. Individuals, businesses are starting to look at those aggregate services. That's changing. Obviously, the peer-to-peer movement of money right now is a big change in banking. Those things are really driving everything right now. The banks are really, you can see the horsepower behind the websites. There's more information out there for commercial customers, and that's helping a lot. And there's still more technology coming down the pipeline that, we're going to see in the next 5 to 10 years. It's amazing where the industry is going, and we're seeing it. Unbelievable when you see the first time 17 years ago, you see the check scanner. You can deposit checks that way, and now we got it on the cell phone, and right. People are they think it's the neatest thing, and here we're thinking, oh geez, in banking we've seen this for how many years, but now the commercial customers had now the consumer customers are seeing the ease in transaction. So the biggest trend we're seeing is as you walk into a bank years ago, all those offices would be filled with people. Mm-hmm. Okay. Well, now you built those locations for all those demand, but nobody's coming in because everything's gone to ACH, direct deposit, check scanning. So you have a lot of space. Now, those jobs didn't always go away. They got moved to a downstairs back room area, an operational mm-hmm. role that created opportunities for people in those areas to develop too. So it's kind of a different switch right now, what we're seeing in banking. Obviously, the technology is making a huge shift for us.
Well, yeah, just personally, I think I might write 3 checks a year at this point. Everything is ACH. It's just so much easier, so much cleaner, and frankly, a lot safer as well. And it's kind of interesting what you said with kind of the competition of larger banks, having those multiple locations and technology really giving you that even playing field. Are there other things between kind of that community bank and like the Bank of Americas and those types of institutions, other than maybe some of their bad headlines they keep getting, but it's to me, again, in my limited experience, working on the other side of the equation, it just seems like there's a little bit more personal effort when you're kind of looking at that community bank situation, because again, they're right there in your community.
You're 100% right. The big, for the most part, all of us have the same products. We just package it a different way. The bigger thing is the relationship in the community and the banker. Typically a community banker is going to have a more hands-on approach in the sense it's going to look for a longer-term relationship. Big banks, and I've been at it where it's happened, is we have a segment that we're concentrated in. This year, we're concentrated in revenues of $0 to $10 million, or $0 to $10 million. Okay, that revenue is built up. I've seen where the big banks will say, well, we're gonna have you stop working with those clients, and we only want you to work with clients from 10 to 20 million, and we're gonna shift those clients to somebody with very limited experience. Sometimes in a big bank that might be a personal banker who, for the most part, wouldn't even see a credit bureau. Or probably has never read a credit bureau. So the shift from a big bank sometimes can be as far as them being able to meet the needs online and some of those easy, apply easy lines of credit that are a one-page document. That makes it a little convenient for them. That's one of their advantages. But for the most part, if you're really looking for a relationship with somebody that you can really sit down, looks at your tax returns, is actually making that decision sitting in front of you, that's a huge advantage on a community bank. And also, when you call a community bank versus a large bank, most of the community banks that I've worked for have a direct number. You actually get a live person versus calling the 1-800 number and sitting on hold for 30 minutes. Well, most business owners don't have the time to waste sitting on hold for 30 minutes. They want an answer. In my business, in my experience, it's all about service too. There's times I'm at a business owner's house at 6:30 in the morning signing paperwork for an excavator. Or I'm at 7 o'clock at night, I'm on a job site inspecting a home build. It's just part of what we do. We don't – everyone say you got banker's hours, 8 to 5. No, banker hours don't exist anymore. I wish that was the case, George. I was happy getting here. I was going to be home by 4:30, and be relaxed on the couch. But now it is more of a service industry than anything else, that we're here to be out there when the customer needs us, because all businesses are different. And that's what I love, because I'm going to be on a job site. I might be get to climb up in an excavator, piece of equipment. I might be in a machine shop seeing something really neat being built for the defense company. It's all over across the board. And I'm told, I was just with a customer the other day, a brand new customer, and they were with a big bank. They said the banker had never been to my business.
Well, and I think that's one of the, as businesses need to be more flexible and be more responsive to their customers, they're going to expect the people who service them to be just as flexible as they are.
Exactly. And I think part of the big banks they get a bad rap because of, it's a lot of it's about sales goals at the big bank, where the community bank isn't about the sales goal. And that's a huge driver in some of the larger banks, is just the numbers. And at the community bank level, it's more than numbers. It's actually, you're sitting down with people. You were here in 08 and 09. We saw what the cities were like. I mean, it was devastating. And we walked a lot of people through those things, and helped a lot of people not have to go through bankruptcy, because we're willing to work with, where the big banks might have said, you know what, this is, you're not doing well. We're going to start the foreclosure, or we're going to, go have to work on a legal document to get past this. It was challenging times for all of us. And working with a community bank, I'll tell you what, I would rather be sitting across the table from the guy I know versus somebody in Omaha or somebody in Phoenix telling me what about my business. And that's a huge item.
How do you handle that? As on the politics side, when you're in local government, you see the people who voted for you, you see the people who didn't vote for you too every day. But as a local community banker, you might have turned this person down for a loan, or, have to have a tough conversation with that individual. Or, do you run into those kinds of situations at all? And it's just kind of something that popped in my mind here to ask you, because I think that might be an aspect. You're not somebody sitting 1,000 miles away in an office, and these people are someone you'll never meet, but in what you're doing, you could run into them.
Oh, absolutely. Sometimes you're sitting with sometimes during the 08, 09 periods, where there were a lot of issues as far as credit deterioration and tough conversations to have. The biggest thing is just being honest with them, being responsive, and showing compassion.
Yes.
These people were, they've haven't slept. They were worried about payroll. They're worried if they're gonna lose their house. The last thing you want to do is just come in there like a bull in a china shop and break their hearts. You really have to sit down and methodically think how this conversation is going to go and prepare yourself for it, because it can get emotional for the borrower. And, you're right there. I mean, I got into banking because, a lot of my family owned businesses. And I always had a lot more compassion because I remember my grandfather running heavy equipment and being in the sewer ditch with them and things like that. So I can relate to a lot of these guys that are getting, dirt under their fingernails,
Mm-hmm.
are really busting hard, working in the cold. They're, working in hot environments. It's just a mutual respect that, when you're passionate about your job, you got to be passionate in those situations to show that you actually do care. And they know that if they it was always easier to deal with somebody that wanted to return your phone call. Even if it wasn't a good phone call,
Right.
They would return it because they knew that at least they were going to, you were there for them and you would help them and give them some ideas. Those are meaningful relationships.
Well, and again, I've had a privilege of knowing you for quite a while here. You've got a great personality and you're, a compassionate individual. I'm a pain in the ass and a jerk, but so I think you've got a really good connection. And I think that's also something too that, I think, is a great capability. And I've seen that in a number of community bankers that I've known, where they're able to have those connections, because you have to have those traits, I think, to be successful working in the community in which you live and operate in, to get people to want to come to you.
Yeah, you can make it in community banking if you're, you can make it, but you really need to have the passion to want to help businesses. You have to earn the respect of centers of influences. I've earned a lot of respect from attorneys and accountants that trust me to help their clients. Mm-hmm. And when you build that trust, those people that are sent to you on the referrals know that they're getting somebody really solid and it works out. I can't tell you the number of referrals I get after 17 years in business. I don't make hardly any cold calls any longer. It's all referral business. And that's taken 17 years of work every day, every phone call, every extra email that you send out and you take the time, every hour extra you're going to stay late at work, or that extra hour you're going to drive an hour and meet with the customer, because most of the banks out there won't go see the customer, and that you're actually there sitting at their kitchen table or on a job site. I mean, it takes a lot of work, but when you get there, there's a mutual respect that when they know that they were referred to you by an attorney or an accountant, there's already an expectation that you're a pretty high level banker.
So it's kind of that adage of, it took you a decade and a half for it to happen overnight, right?
No, it didn't happen overnight. No, I made my share. I got my referrals over the 17 years.
Yes.
But now more than ever, it's a lot of groundwork, because when you're learning credit, you're going to make mistakes as a banker. You're going to say the wrong thing because you're young. You're learning the process. You're learning the banks. Every bank has a new credit policy. Everyone has different underwriting standards. You have a different management style and a credit culture. So you've got to kind of go through those cycles of learning everything, and you're just acquiring knowledge the whole time, and you're absorbing. I had great mentors in banking throughout, whether it was at Wells Fargo or at the community banks I've been at. Mm-hmm. I've had fantastic people and surrounded by a great team, and that makes the entire process and career well worth it.
Yeah, and that's always the great thing about that as well. If you can kind of have that positive culture there to teach you, because we all make mistakes. I make probably 10 of them before I get out of bed every morning, and have those people who are willing to help teach you and not look at it as, well, this might be my rival, next year I'm not I'm going to throw them out to the wolves kind of thing. So that's a really great positive, I think, image to try to get people to understand as well, because it might be another area where, sometimes people look at banks as not being, perhaps as compassionate of a work, environment as I think it really is, especially in community banks. I think there's a lot of positives there. Yeah,
I think and community banks are very much about the community, and We're at all the events. We're the sponsorship. When the school comes, we're the ones that the school's looking, the kids know about because they see our logo. They see what we're doing in the community. And, sometimes the larger banks just, they have the locations, but they just don't seem to be as much involved as before.
Or they have the 10-step process, whether it was in my community work before, president of the JCs or as mayor of Isani, I was always looking to have stuff funded by our business community and our banks as well, and going in and say, okay, well, we've got this and this and this. And then after a while, you're like, oh my gosh, when you start really adding up what, a lot of these community banks and credit unions are giving back into the community through these things. It is, again, they're really trying to help make there be a good, positive experience for everybody. It's also a good business, position to have, because the more vital you make your community, the more opportunities you have for banking services. Which kind of leads us into, if I walk into your office and say, I have XYZ business, what do you look at to make a determination of whether, you show me the door or open up the teller drawer?
Well, commercial banking and relatively banking and credit is based off the 5 C's of credit. So as a banker, here's kind of the nuts and bolts what we're looking at. Number one, we're looking at the character. And when I say character, we're going to look at your credit history. And by doing that, we're pulling a credit report. We're looking to see how you paid your past obligations, whether you had any bankruptcy, foreclosures, judgments. Are you current on your loans? What's your credit score range? That's a huge determinant and factor in any kind of application, is how you've performed. It's a performance review, essentially, is what character is. We're also going to look at, our next C is capacity. Capacity is going to consider your cash flow, whether it's from a business cash flow, how the business is doing overall, mm-hmm. or if it's on a personal side, what's your debt to income ratio? Mm-hmm. And that's looking at what you take in and what you're paying out as an obligation, and that's a huge deal. I mean, we look at those and numbers all day long, and they tell a lot of the story. Especially when we look at a business, we're looking typically at a 3-year history of financials and kind of building that cash flow from scratch. On the personal side, we're taking a couple pay stubs and maybe a tax return to look at how you're performing as far as what's your income versus your debt. It's essentially, then you got capital. What's the equity situation? What's it look like right now? Do you have equity in what you're looking to do? Are you putting a down payment down on a building? Some of these SBA programs, you can get in a commercial building with as little as 10% down. Fabulous program. Mm-hmm. Most conventional is probably right around that 30 to 25% range, which is still good. But, we're looking at what kind of capital do you have? What's the cash? What equity do you have in there? Another thing we're going to look at is the condition. We're going to look and kind of determine what's the market condition right now. Obviously, if you're getting into an industry that might be closed down right now, might not be the best market condition to get into right now. How are you going to use the funds? Things like that are going to look at what's the size of the loan. Where is this going to be? Is who operates the business? What industry you're in? What kind of economic factors are going to be playing here in the environment? And we kind of examine that area a little bit. Next is collateral, of course. That's our last of our C's. And collateral is basically what's the business or personal asset you're going to pledge. Obviously, most of this is in a business sense. On a building, we're going to look at an appraisal as being kind of our guiding light as far as what's it worth. On a residential, you're going to look at appraisal. Equipment, you can look at a lot of times. You can order an equipment appraisal, a good source of finding information what your equipment's worth. If it's like an excavator, is like Machinery Trader, we're going to look at those. Those all kind of come into play in the whole decision making. If it's a new business, it may be a business plan that comes in. And really, how much effort, in that business plan are you going to put forward? I've seen everything, George, from a napkin. Basically, this is my business plan. I want $100,000 or $200,000, and here's what I got, and I don't really have anything more other than this business plan that says I'm going to make a lot of money. and it's on one page. Versus some of the people that I'm working with come with a complete package, a detailed projections on financials, a justification on each financial, a story on their management history, why they think this is a good business to be in, and what's their strategy, management profiles of individuals that are going to be on staff with them, as far as if it's a team of people that's starting this business. So everyone has a different angle to look at. So, I've had everyone from the napkin all the way to the people that have a detailed business plan. And really it gets down to the numbers. You dig in there, you look in, does this meet our credit culture? Does it meet our lending policy, what they're asking for? Are we a good fit or are we not a good fit? Sometimes people come in there, they just aren't prepared. And other times it's like, wow, it looks like we got something here that's going to work. And it really depends on if it's an established business versus a startup. Big difference in what people come with. You can tell immediately from a business owner on if it's going to be a really good opportunity, loan opportunity, or if it's not. If they said they're going to have their accounts ship the financials to you, that means they're usually pretty well have a relationship with their account, and he's got a lot of their financial, and it's going to be very organized and very detailed. And they'll allow you to speak to the accountant with any questions that you might find in the financial. Other times you'll get a shoebox and basically a QuickBooks that's printed out that doesn't have a lot of information. They're not sure why QuickBooks is saying that information because they're trying to do it again. They're wearing too many hats at that time because they're more focused on getting the products and services that they're really good at. Mm-hmm. And the numbers are just kind of one of those things they got to get, they're working on.
So well, what is the mix of that? Because when I was working at Precision, we got to a point where we started to buy up some competitors simply because it was easier to buy them up and because they, we could just then acquire their vendor approval list versus going through a 2-year, process of trying to get approved by larger corporations and things to supply to them. And one of them was this operation down in Milwaukee. And so I, went down and, took a look at their books and talked with the owner and went through it all. And I came across that this guy was running his horse farm cost through his business, which for us was actually great because he was a lot more profitable than what he had shown and what he based his price off of. So if you took out all the crap, it was a great deal. So do you ever run into something like that where, there's, either a big surprise or things are just, they don't really know what they have on the positive or I guess on the negative kind of thing?
You know what? You do see that in, great business owners will be able to pivot and recognize if there's an area or division that, geez, we thought this was the most profitable division. When they really break down their sales, if they're well organized, they'll break down their sales and say, okay, geez, I was in this area here. Mm-hmm. I was making this widget, but I was doing all the service work here. And gosh, I'm making more just servicing than I'm doing selling these ancillary products here on the side. I had a little retail store, but my focus was I was making more money on that side, but I never really broke the numbers down. And then you'll see them transition and move that out of from doing that one service strictly when they start looking at their numbers and saying, well, this makes no sense. Why have I spent all my time on this area when it's really not that profitable, where I really have this very good area to strive in? I actually just saw that with a business owner that recognized they were doing that exact thing, that they had a division that they're working really hard on, had a lot of labor costs, had a lot of equipment costs, and they found out, geez, it's just really not that profitable. Mm-hmm. Maybe it's time to exit that. And when they did that, it was a sigh of relief. They were making more money today than they were prior because they realized that they needed a pivot.
Yeah. And and again, I think just kind of going through and doing that due diligence was something I always loved because again, you could, have some really great conversations, with people about that, but it's a positive for that business regardless of how it turns out because they get another perspective on what it is that they're doing. And like you said, can really open their eyes on that. Is there?
You're 100% right, George. Just saying, as far as some business owners don't have anybody to talk to.
Yes.
and they're afraid to talk to anybody about their numbers. And I used to get calls from business owners. They were excited because they had a banker that actually cared, and they said, geez, I'm up 30% this quarter. And they didn't have anybody, and they didn't want to tell their friends.
Right.
So because their friends wouldn't understand what those numbers meant in reality, me knowing their financial situation, it's like, wow, they needed that cheerleader and build them up. And that's a part of the relationship of a community bank or any good business banker for that matter.
Yes. Just one question in this area. So about, are any one of those 5 C's more important, or is one of them the gateway, just kind of checking that basic credit and that kind of thing to see if you go to the next stage, or is it really kind of more of a holistic approach at that whole picture?
I mean, ultimately it's going to break down to cash. Cash flow is probably the biggest driver.
Cash is king.
Cash is king. What's the company doing? What are you doing personally? What does that look like? I mean, those are really, collateral, you can play around with that as far as, what other opportunities do they have for collateral if they're a little under collateralized in some situations? Because, if it's a business owner, they may have stuff on the personal side. They may have a mortgage, tons of equity in their home if they don't have a lot of equity in the business, because not all businesses, a lot of them operate out of their homes right now, and that's how they start the business. So there's a lot of give and take. They're all very important, but cash is king.
Yep, and personal guarantees are awesome. If there's
yeah, and that's just in anything. That's nowadays it's so expected to have a personal guarantee, and it pretty much goes without saying that you're going to be on the hook for this if things don't go as planned.
Yeah. So how do you handle or what kind of effects do you have from decisions that are made at the federal and state level? We'll get into kind of the regulation here in a minute, but every year, states kind of tinker around a little bit with things here. Every state, has things regulated. You can have banks that are regulated by the state, by the feds, that whole kind of gamut. How does that all kind of interplay there? And then when, rule XYZ is changed at the federal level, I mean, how much of that from a year to year standpoint affects you or doesn't affect you? How do you deal with those kinds of things?
It's kind of, usually they're not big changes that happen. Right now, I mean, you're if you look back at the U.S. Patriot Act, back at all the customer identification program, that changed the industry way back in the early 2000s. That was a big change for the industry. But year to year, we don't see a ton of changes. It might just be a little change on certain items. I mean, in the mortgage industry, you might see the rise in what's considered a jumbo mortgage. There's not a lot of big strides in banking nowadays. It's probably the biggest stride I'll see is how PPP and how the SBA and things that are happening there. We're seeing more changes on deferrals of payments and things that are more effective right now in this regulations that they're issuing with the CARES Act. That really is changing things right now. That's helping businesses a lot. But from the day to day, there might be some tweaks here and there, but really we don't see a ton. And being in the commercial side more, we don't see as many changes commercially that affect me on a daily basis for making loans.
So who regulates you? Is it a combination Fed state? Is it more one or the other? How does that work? And then what kind of, we just came through the Christmas holiday season, and obviously It's a Wonderful Life is a big movie during that period of time. And one of my favorites, I'm just going to tell you, it's my favorite movie of all time for lots of reasons. But there's a scene in there where the bank regulator comes in and wants to take a look at the books at the end of the year. So what is your version of that?
It is very much that when the bank regulators, I mean, the current bank I'm at, we are regulated by the state and the FDIC. So, we go through the exams every, I think it's 17, 18 months. It seems like we have somebody come in and, they want to examine your loan files and look at everything and see if you're doing a good job. And the biggest thing I can tell you when they come in is you want to have your files up to date and very clean and organized and neat and tidy. Mm-hmm. That goes a long ways. If you did everything right along the way, typically, and you have your files very clean and detailed, there's not a lot of questions.
So
obviously they're going to review the financials and make sure everything is, good and that you're not making high risk loans and they're performing, but they're going to look at, your past due credits, what's your property taxes look like, how many are delinquent right now. And for the most part, they're there to do their job. They're there to keep us, in line in a sense, but really, I mean, it's not as horrible as it could be. I'm sure years ago when 08, 09, and I didn't get the privilege of sitting in on those meetings, those probably weren't fun meetings. Mm-hmm. But nowadays, while the economy is good and the trends are good, and banks, for the most part, their past due lists are probably very small right now. Now, if it was different times, I would say the regulators, they're going to be on you. They're probably going to be, they're there to look at every nick and cranny to begin with, but they might be harder.
Are they pulling, X percentage of files and then and looking through that, kind of sampling different things, or what is that actual process, what they decide to look at?
It's a sampling. It's a pure sampling of your files. They're probably going to look at, as far as your larger credits, because those are, obviously the most risk to the bank as far as on a pure volume basis. They want a sample of pretty much kind of what you've done in the last couple of years. And then in reality, they'll tell you exactly who they want to see. They want to look at, they will give you the names of the files they want to look at, and you'll provide those files.
So when you're going through this, process, and we've kind of touched on a little bit of how you finance and that type of thing. Now you're in a position where you get, a lot of referrals coming into you. If I'm, a new banker working for you and I've got nothing in front of me, how do you start that out? Do you have XYZ businesses again that you say, okay, well, I want you to start working on these couple, and then you need to get, bring in X amount of dollars in new business? What is that process? If I'm just kind of, you just hire me with, some limited experience I might have at another institution, where do I go from there?
Part of it is probably depending on where you come from. If you've been in the community, or if you're brand new to the community, then more or less you're going to learn, go on a lot of sales, essentially customer call, relationship calls. We're going to I'm going to take you out and introduce you to my clients. You will get a feel for what the style is, kind of how I interact with a client, so you can kind of feel confident. In some cases, we may transition some clients to you by doing that and say, geez, here are some clients that I want you to start working with. And that may free up my time more. I'm still going to be a point of contact for them, but I really want I want to get you up and running, because I remember coming to my new bank. I came there with 0 new clients, and I had to build my portfolio from scratch. I did not get I didn't get anybody. So I had to go out and make the cold calls, do the marketing myself, and build my centers of influence and do that. And it takes work. I mean, you have to be willing, you have to be fearless to talk to people. If you do not want to pick up the phone or talk to people, you will not be successful in banking, especially in a commercial banking role, because it is so much about meeting with people, and the expectations are you're going to meet with people. It's for a lot of people, it's scary to pick up the phone. I had an old sales manager once tell me in an interview when he was hiring me that pick up the phone, call this number, and ask them if they're interested. And I did that, and at the time they were not interested in the product, and hung up the phone, and he asked me simply, does your mom and dad still love you? I said, yeah, obviously they do. Was it that hard to pick up the phone and make a sales call? That has lived with me since like 2001. Mm-hmm. And I love that because it shows we're all afraid to pick up the phone at first. And we're all afraid of rejection. But sometimes I tell my customers, even if they're a prospect today, if I can't be the first guy, can I at least be the second person you call when something goes wrong? All I want is to be second. It doesn't really matter if I'm first now. And 90% of the people will take your card and say, yeah, I really like what you're saying. My rate right now is XYZ, or geez, I've been with this bank for 15 years. They really helped me in 08 and 09. I'm really not ready to move. Mm-hmm. And then sometimes you'll find that with all the movement of bankers, because bankers tend to move on and trend every 3 to 5 years, they seem to move to a different bank, that their client base has been left behind. So there's a void sitting there, and they don't have a banker. And then they're like, geez, I really need to talk to somebody. You might be that person that, being a new person at that bank that's hungry and got some grit and wants to get out there and wear a pair of shoes off the bottoms, that you can really be there for them and really incite some passion back into their business, into their banking.
Well, and there were two things that occurred in community here that to me seems like it might be fertile grounds for banking relationships to change. One is where one bank gets a little bit in trouble, as happened during the Great Recession, and then they're bought out by another one. Or you have, again, without mentioning names, we had one where the majority ownership decided to have a different minority owner position, and that person who was very popular in our community moved on to another institution. How much of that changes? Does that, obviously if it's a big corporation that doesn't have as much impact, but I don't know if we just happen to have more of it, and more of it happened at a certain period of time, but how often does that happen in community banking, and what does that really do to those kinds of relationships?
That's a fantastic question. We are, as you probably have seen over the last probably 5 years, the acquisitions by community banks of community banks. And sometimes you see larger regional banks buying community banks. That can really rock a business's world, unfortunately, because you got a new set of eyes. If I'm a community banker that's used to making all the decisions, and now that decision making that I was able to tell the customer, yeah, just go buy that piece of equipment. You're good. We'll work on the details, and tomorrow we'll get it all set. Just stop in and sign the loan documents. If that changes and you've got to send it out of state, or you've got to go through a long credit process to get them approved, and if that industry is something that bank is really not interested in pursuing, that can be a big cultural change, especially in client base too. You remember 08, 09, as far as like the home builders. Not a lot of banks wanted to get back into doing land development and residential developments. Some banks never wanted to be in it and still don't want to be in it because of what happened back then. And other banks have a good set of builders that they're comfortable working with. That industry was so rocky and changed that some builders were having to look at different bank options because you never know. Banks can change their credit culture just like the big banks change their credit culture. When I was there, it was, we only want to deal with customers with 10 to 25 million now. Well, then you have you spent how many times, calling on all these customers between under $10 million, and you were given all your time. They were used to having your time. And now you're told by management, I got to focus only on these, and I got to shift those clients to somebody else. That's a scary thought. And you see that when lenders leave sometimes banks, there's all kinds of things that, lenders have. A lot of times there's a non-compete and no solicitation agreement that may prevent them from talking to a client for X number of months, maybe a year or so. But a lot can happen during that time period. A lot can happen. And it really depends on the health and strength of the bank. That's a huge factor when you look at going to a bank. What's that trend look like? Are they very much loaned up on deposit? Are they running what we call hot? As far as you're pushing your limits versus a bank that's more conservative, that's has a low loan deposit ratio and has plenty of capital to make loans.
And that was a couple of those situations occurred here where, a number of banks didn't want to, come back into land development. And so when it started back up in our area again, it was, private dollars that funded these developers. and that kind of, started that flowing again. But it really was, I don't know if surprising is the right word. I guess, not much should surprise me anymore, but where you had that kind of consolidation of banks kind of merging, and we had, California Bank buy one of them, one from Wisconsin, hop over the border and buy another one. And there was a lot of changing, and I still see a lot of that changing going around. Do you think there is more of that trend where you're going to see more of these regional, kind of banks that are going along, or is that, one or two kind of community bank going to survive? Is there a consolidation trend going on?
There for the number of years we've been seeing a large consolidation of banks. It's the community banking world is shrinking, and it's partly we've got the cost of the cost of keeping up with software and regulations and things like that they want you to do is more costly. The systems cost more. The vendors are not cheap. So, just like any business, we've got costs that are rising, and you have larger players in the field that really are targeting community banks that want to move into Minnesota. You're seeing, like you said, the Wisconsin banks coming across. You're seeing Illinois banks coming across. And most recently, you're seeing South and North Dakota coming this way.
Yeah.
They are really making a push to get into this market and have done a great job acquiring community banks. I think we're going to see that trend continue for the next probably 4 or 5 years at least, if not longer. I'd be interested to see if we'll see if any new banks will, investors will pull together and start a bank, if they'll do that again. But you are seeing a transition, just like anything. A lot of these community banks are family-owned businesses, and they've been in the family for a number of years. And in some cases, there's not somebody who is managing it or wants to be involved in the bank any longer. So then you get to an estate issue and trust, and what do we do with the bank at this point? Who's going to take over? And and sometimes it's time to pull the trigger because the heirs don't really have the passion to be in banking at that point.
Well, and it was kind of an interesting thing you talked about there, where with whether it's the actual cost to continue serving at a higher level, demand from customers. I think it's going to be one of these things where, people always bemoan the fact that, that small business on Main Street doesn't exist anymore while they're shopping at, a store in a mall in the cities or something. Right. And I think the same thing with banking. I think people are going to miss having that community bank option, but yet they want to have a lot of services that one either. And I think you made a good case that a lot of these services can be provided by your community bank. But, they'll look at, maybe some intro into something else. It's, unfortunately people who carry a lot of credit card debt, they'll go from card to card, whichever one gives them, 12 months of 0% interest or whatever, they'll jump all over the place. Right. And I've seen some of that stuff in banking as well. But a lot of this, I think, is kind of an outcome of what customers are demanding of banks to do that maybe some community banks aren't able to do. And and maybe I'm just nostalgic, or, my whole premise in Wimer's Wilderness is about local communities. But I think as you see less and less community bank options, that is really going to change the makeup of a lot of these smaller towns and smaller cities, where, again, that bank just isn't there to, put your money in and get loans from and that kind of thing. They're also involved in your local chambers of commerce. They're also involved with, your local sports clubs or schools and donating things and all that kind of stuff that really helps make up the fabric of the community. And I don't know if that works if they're part of even a 20 chain bank, let alone, large, 1,000+ chain institutions.
I think the biggest challenges for community banks is, the breaking the mindset. The big, large banks for many, many years told us they had 20,000 or 4,000, 5,000, 6,000, 20,000 locations
right.
on every street corner. Well, now that they're realizing that business model, given this shift of technology, is not needed. Mm-hmm. So now you'll see in the news the larger banks are now closing those locations down. So as a community bank, our biggest challenge probably is the mindset that, the fear that if I'm in Florida, I'm not going to be able to get money. Well, how often are you on vacation that you don't find an ATM right. that could be free? Or how often are you on vacation going to a national bank to walk in to get $200 or apply for a loan? I think those mindsets of at one point banks didn't have the technology, wasn't available to them, but now the technology is available to so much more. Granted, most community banks are not going to be your 24/7 as far as customer service line. Mm-hmm. But in reality, how often are you going to run into a situation that you really are going to not need that? And in most community banks, you're probably going to know the people in the bank. So when you call on Monday, Tuesday morning, you're going to talk to a live person anyways, mm-hmm. versus this whole mindset, I've got to have 24 hours, 7 days. I've got to have the most robust online banking. Well, from the most part, what I see of customers, they log on to see if their checks have cleared, what's their balance, can I make a loan payment, can I transfer money from my line of credit into my business account? For the most part, that's it. Did this check? Can I see this check image? I want to print it out, or I want to print my monthly statement. Those things are one of the simplest things. I think there is a little bit of the newer generation we're seeing wants to have that relationship with a bank again. Mm-hmm. They seem to want to grasp talking to a live person versus some of the automated process. And maybe it's just as kind of that nostalgia, that community thing that we're seeing. And we're also seeing the large banks, moving out of those markets. So then they're left behind. So again, it's kind of getting the mindset you don't have to have a checking account or a large bank to travel the world. It's not that anymore. They did it for many years telling you had to, but now with all the technology and the changes we're seeing, it's simultaneously easy to bank anywhere. Whether you have a checking account in Chisholm, Minnesota, or whether you're banking down in Florida and your check's deposited at a bank in Florida, your debit card's going to work.
Right. And I think most of the things, like you said, most of the things that you're going to want from an online service like that is, you'll be able to get that at any institution, because it's probably, it's beyond the 80-20 rule. It's probably 95% of everything you do is just very simple. Anybody who has a very complicated or complex situation probably has a more personal relationship with the bank anyway. Your most customers of the bank are going to be able to find whatever they want online with whatever size of banking institution it is.
Oh, absolutely.
And I think it's like a lot of the smaller businesses that are successful with kind of the age of Amazon and direct shipping. A lot of those are very capable of providing services online as well, and who grasp that. And I think those banks that can be flexible with it, it's just this accumulation and this kind of buying. And again, the example you used of, a family with, owning a bank and either, not being that interested or interested enough to run it well, which was a case we had here, a few years ago too, does also usher in a lot of changes as well.
Yep. You're 100% right. It's definitely a shift going on in community banking.
So what kind of challenges do you see out there? I'm kind of curious to know, maybe some of the challenges that you face. Cause like you said, when you start out, there's, you don't do everything right. And, are there, places along your career where, you've learned something, that's been really helpful for you as you kind of continue going forward?
Gosh, it's always the, it's always one of the situations that you never want to overpromise. Mm-hmm. That's probably one of the biggest things is being upfront and honest with the customer on what you can do and what you can't do. If you can do that, that's more than half the battle right there, because they're coming to you as an expert. They're hoping that you have the knowledge and the skills to tell me or tell the business owner exactly what the expectations are. What's the interest rate going to be? What's the term going to be? Would you lend on this collateral? And sometimes the problem with people early in their career is they don't want to say no. And they're afraid to tell a business owner no. What they don't know is that business owners heard no a lot more times than just you.
Right, yep.
You're not the first person to tell them no, but you might be early in your career and you're afraid and you're hungry and you want to really do this loan, but you really don't understand what's going on here in this business, or you know what's going on, and sometimes people just have a really hard time saying no. And that was a challenge even for myself. Even sometimes today, I'll work extra hard on a deal to see if there's something there before I say no. I want to take the time. They took the time to bring me their financials. They took the time to meet with me. I've been in their business or I've been on their job sites. I really want to uncover every single rock before I have to say no. Mm-hmm. So the biggest challenge is being able to say, no, I can't do this because of X, Y, Z. But if you set it up right, I can't do it now, but if this improves here and here and here, let's walk through these steps to see if this happens. I think we got something here that might work. So you try to leave that door open as much as possible. Otherwise, you don't want to burn a bridge, especially in a community bank. We're typically at all the community events. You're there with them. You want to be as courteous and as helpful as possible and bring the passion, even if it means saying no.
Well, and I think that's also a good sign of respect to that potential customer as well, to be honest and upfront with them, because, for me, I believe the only thing that I really truly have and own is my word, is your credibility and your character, and telling sometimes something that, a person may not want to hear, but it's the truth. That goes a long way. And it gives you a good reputation. And they also then know that when you say yes, they can take that literally to the bank. What is that process? So you have a loan committee, how does that go? Okay. You decide, yep, I want to do this. What do you still have to do? And obviously you're in a, more senior position than somebody just starting out, but where are those, kind of levers of what, one person can do, or is there, and I'm sure it's different from bank to bank, but kind of run us through that real quick.
In my community bank setting, there, I've been in, through all my banking, it's been different. In my current setting right now is I do have a lending authority. I do have approval to approve deals up to X, Y, and Z within my authority. If I don't have that authority, I have my senior chief credit officer. He is the next person I would go to, and I would present the deal in a written presentation with financials and kind of description of the business, what's the collateral, the whole picture, what am I proposing and recommending, and he would review it with me and we talk about it. And if it met his criteria and he gave the nod, then I would just move forward with the customer. If we have to go, then we go to more of essentially ownership of the bank. It's in our case, that ownership's on site every day, so it's not like at another institution I was where you met on Tuesday, and that's the only time we really wanted to look at. Tuesdays was credit committee, and then if it was a higher deal, went to another level committee. So my process is, which helped me, is the response time I've been able to increase because we're able to make decisions now, and we're not waiting for the Tuesday of in 2 weeks, and then credit committee comes back and say, we got some more questions.
Right.
No, let's talk about it now.
Yeah, we ran into that actually when we were trying to do the deal for the hotel in town here. Was the one institution that locally that was going to be doing it. They had that, and it was what you just described. I think it was for them, it was a Wednesday or something, and it was the next 2 weeks out, and then they had questions back, and then the developers of the project were like, this is ridiculous. And they wanted to do a local bank, but they had financing that they could tap into. We had the Hinckley tribe were part of the deal as well. So it just got to a point where it said, oh, forget that. The money's here. We're just going to do that and get going. Because you're right. I mean, that can be frustrating, especially for people who need to get going on a project. And that can make the difference between something happening in a local community, and being able to have the flexibility like you're talking about is very, can be very important.
In my current situation, most, because we're a smaller bank, my chief credit officer is right next door to me. And when I get a deal, I let him know what's happening, what's going on, what I'm seeing right away. And, and we'll kind of talk, and he'll come over, hey, look at this deal for me and see what you see differently. So we kind of bounce ideas off right away. And I've been in it long enough that I can look at a piece of paper and tell you if this is a deal or not.
Yeah.
I won't have to spend a lot of time, because I'll just start looking at the numbers, looking at the debt service, and say, okay, I think I got a deal here. And I know where I'm going to spend my time on after all these years.
Yeah. And that's one of the fun things that I always enjoyed when I was doing due diligence on companies is you can take a look at a balance sheet, or you can take a look at, what their financials say. And you see it almost in a matrix-like style. You see what's behind those numbers when you're seeing that sheet of paper, which, that's sorry, I delved into that as a little bit of a flashback of a prior career.
You're 100% right. I mean, when you have that ability, your response times are better to your customer. They know that you understand the numbers, and you're much better positioned to win that deal, because right now the community banking market, it's very, very competitive. I mean, it's competitive across the board. Every bank has got a lot of capital. They all want to make loans, but in the end, it's the banks that are really chasing the deals. Are you really doing a great disservice? Are you really servicing these customers? Are you really building the relationship, or are they just a number on a spreadsheet?
Mm-hmm. Yep. Okay. So can you pick one deal, one situation that you think was one of your greatest successes, and kind of tell us what was that like, or maybe even your first kind of, deal that you put together, where it was really you from beginning to end?
I'll tell you an interesting one, and it wouldn't be my first deal. It would be a deal not too long ago, because it's about being extremely, as far as personalized service and taking care of a customer. A customer was trying to purchase a building, and the sale of the building didn't go through. They ran into some financing as far as being able to get the loan all set up, and and they couldn't agree on some additional repairs and everything like that. Well, meanwhile, I was sitting on the ML. I looked on the MLS and I said, geez, this might be another building for you to look at. It was several $100,000 less, and the person bought that building instead and saved, I can't tell you how many hundreds of thousands of dollars they ended up saving.
Well, then you should have gotten some kind of realtor commission on that as well.
no, but again, this person was referred by an accountant. Mm-hmm. They were and their attorney saying, you got to talk to Keith. He's very knowledgeable. He has some great ideas. He's going to walk you through. This person, didn't know what to do with what to do on this one building. And next thing you know, they had walked away. They told me, I said, well, hold on. Well, you're done with that? Absolutely. We're done. I'm sorry. We're not going to be able to do a loan. I said, well, where do you need to be? Let me look, and they had a realtor, a commercial realtor. And here I find a building, and they're like, well, that would fit us perfectly. And that's actually really close to us. Mm-hmm. How'd you find this? And it's only that? Oh my gosh. Are you kidding me? Do you know how much you just saved us? I'm like, well, I know how much. I mean,
yeah, all the numbers.
I know the numbers. I was disappointed because I didn't get the deal, and I'm like, oh no, this is not. There's all this work and and this deal is dead. Oh my gosh, this is not the way you think it's going to go. And then all of a sudden you help them. And to this day they laugh because they're like, I can't believe you found us this fantastic building. It worked out perfectly, mm-hmm. and we saved how much money. So when you have that trust, and they jumped on it, that they're like, oh my gosh, wow, there's so much value here. I'm so glad I met you.
Yeah, and that's great. It reminds me of, you remember Sean, right?
Yep.
Yeah, so Sean, who's EDA director in Isanti for our listeners when I was mayor. He was just a fantastic talent. It was just a joy because that's what he would do for, we were trying to recruit to the city or people who were interested. And it's just amazing. And, for you, it was probably just a couple of minutes looking at something and not really that big of a deal, but it is just amazing how having that extra bit of caring and hard work and dedication and intelligence to do it, how that really can make a lot of things happen. It just makes the whole world, and that company is probably never going to stray from your portfolio.
Oh, it was amazing. And I had another customer just the other day just tell me, I wish I would have met you sooner in my banking career. As far as, they brought me a new deal and they said, here, I was told you're the person to speak with. I've been hyped up. They've been told I got to meet with you. And we helped them on I just helped them on a project. And he says, he told the ownership, I wish I would have met Keith and this bank a lot sooner in my life, because this has been one of the easiest, simplest, and best experiences I've had with a bank.
And oftentimes those are great customers to have because they're most likely have some, pretty good numbers and are good at what they're doing, and they can afford what they need to do. And they just haven't really taken a look. Like you said, they might be with somebody for a long time and not really think that there's something better out there.
Exactly. I tell people, you never get a client if they're unhappy with their bank. You never do. It never works out that they're unhappy. They're mad at their bank for a reason. I usually get the clients that are very happy with their bank, but there's a lack of relationship with the bank in the end. They don't hear from the bank. It's kind of been on autopilot. Those are the relationships I win. When they're mad at the bank, it's probably because the banker told them the truth and the numbers don't always, are telling a different story than what they want us to tell you.
Right.
And that's sometimes a hard conversation for those bankers. And then you get mad and then they come to you and you're like, well, I'm going to take a look at it. But from what you're telling me, I may have the same reservations that they have, but let's at least explore every avenue and turn every rock over to make sure that I didn't miss anything. They didn't miss anything. Let's talk about this, and I'll spend some time working on it because I really do care. And I love working with small businesses.
So what kind of trends do you see out there? I mean, what is your world going to look like in 5 years from now?
Gosh, I don't know if the government ever gets, they seem to they want to take my job away, George. I might have to think about things.
Well, they do their job so well. I mean, why not, right?
Oh my gosh. Obviously, the biggest trend right now is, all the businesses want to talk about is PPP, the Payment Protection Program, the 2.5 times the monthly payroll that got injected. You know what happened is that was really a big stimulus for a lot of businesses that needed it, and some that took it that probably didn't need it as much.
Yep.
So what happened is you saw that they became, if you had a company get an instant injection of $100,000, well, they may not be into their lines of credit, or they might have, had just a banner year, but they got some extra money under their belt and they paid their loans down. Mm-hmm. So that's a huge deal right now. Now we're looking at a second round of PPP coming around. And it's hard when you're a bank and your job is to make loans, but people are not borrowing. You've got some pullback with everything that's happening in the world and the country right now. Plus the government now is saying, well, we're going to continue making economic disaster loans. We're going to give them a 3.75 rate fixed for 30 years. We're going to extend that program. Uh-huh. So it's a challenging time to be in banking. The trends are going to be changing even more. It's hard to say what the next 1 to 2 years are going to look like. Now we have a new administration coming in. We don't know if there's going to be new regulations on banks or not in that with the new administration. We already know they want to play it kind of. They're already starting to get into the banking world and making loans. So I think this year we're going to see probably banks are pretty well capitalized now, but I think there's going to be a lot of for the next year or two, demand for loans in the commercial area, for sure.
Yeah, and it seems to me with the amount of cash that's been injected, the amount of programs that happened previously, the next, if you just go off of, say they're going to fulfill 30 to 50% of the promises made, kind of from a general standpoint, there's going to be a bunch more of cash injected one way or the other. Mm-hmm. You get into this whole idea of whether it's, tuition loan forgiveness or, if you look at, rent payments and mortgage payments and, forgiveness and I, it's not as if, the government says, okay, we forgive all of that. What about those financial institutions that are on the hook for those things? So, I mean, there's going to be, it's going to be an unsettling time. I'll try to be generous with that. And then for our listeners who will be listening to this, because I'll have somebody who will start, following my podcast and start listening to things, 2 years after it's been recorded. This is January 6th of 2021. Look up what's happened today. And that's all I'm going to say about it. Yeah. The world is a different place. So I just think it's going to be very unsettling. And how do you make those projections of what your revenues are going to be? And then the other side of it, and I just did a podcast about farming, where if you take a look at the federal subsidies for farmers and how they've essentially quadrupled over the last 4 years, I don't know how you wean them back off of that. And that's the same thing. And it's not like I want businesses to struggle or anybody to struggle, but when you put the amount of cash that's been put out there, whether from the Fed or or the federal government, and when the federal government does it, it's a pretty blunt instrument. Like you said, there's probably, some places that didn't necessarily need to take the money, but it's out there, so they take it. I just, when you start cutting that back at some point, whether it's in a year, 2 years, that might be a little bit more of a shock to the system. So God love you for being in banking, but I think you've got some tough times ahead.
I think you're right. I think, you also have the housing market that is very high. You have building costs that are very, very high right now. That's going to affect for the consumers out there. I mean, right now, a lot of people have equity in their homes, but, how much of that is true equity in the end? I mean, you lived in 08 and 09 in Isani. Mm-hmm. We saw together what the two communities look like up there, Cambridge and Isani, when it was all said and done. I mean, there could be a market correction coming, and same thing in the commercial world. I think everything's high right now. It's very high, and so we're going to have to kind of be mindful what happens with the stimulus money. How this PPP money goes, and how as far as the pandemic goes. I mean, that's a huge driving force in Minnesota, as you know, is with the restrictions for restaurants and bars. And it's not even the restaurants and bars, it's the employees that work at those, it's the vendors that support those industries, that, how they were affected, how much are you going to be effective, and when will we see a bounce back?
Well, and even the long-term structural changes of businesses realizing they can have 25%, 50%, 100% of their employees not working in their commercial space, which might be right next to those bars and restaurants and everything else. And they're a lot more profitable if they don't have to carry that building overhead and all that. So again, I think there's structurally, this is, we can look at it from a positive standpoint. You're going to learn to be a lot more creative. On the negative standpoint, people who can't be creative and roll with this may not be in the business, in 2 years from now.
Yeah, we've had to see businesses really adapt, change, willing to change and willing to pivot during this time from takeout to I'm going to do it this way. I can't have employees in here. We're all working from home. I mean, there's so much pivoting right now, and of course, that pivoting is going to create new industries and new services that are going to be needed, and it's going to keep on going, but it's going to take time to catch up right now.
Yeah, it's anytime you have, any kind of significant change, it is it's a matter of who is resilient, and again, those businesses that have the cash to kind of flow through things can come out the other side. The others, they're going to need some really good community banker to help them through that.
Yeah, and I would encourage any of your listeners to seek out a community bank and at least sit down with them, and actually sit down with a commercial lender. That's who you're going to want to sit down with and meet with them, or a business banker. Sit down there with them, have coffee. Don't come down once, come down twice. Take them to your business, walk them through your process, show them your CNC machine, what you're making. Let them get involved. There's nothing better when we get to come to your business and walk around and really get to know you. And that's where we do, because we see your passion, and that's a huge thing. We'd rather not be wearing a suit. We really want to be in a pair of boots, a pair of blue jeans out there. I mean, we don't mind the golf course either, but I mean, for the most part, I don't get to go on the golf course much. I'm pretty much in the blue jeans and the boots in your business, and want to really see and get dirty and try something. Teach me something, because if you teach me, it's only going to make me better to help you and help another client down the way. I'm looking for you to be my educator and train me on your business, because you know what? I'm a great sales force. I'm a great referral source. If I know you really need somebody to make that product, and I may have somebody I might be able to connect you to, and that really helps each other in the end.
Yeah, and that is an excellent point of how you can network clients together to help each other out. I got an opportunity. My very podcast just before this one was on aquaponics, and I got an opportunity to go through their facility, and it was phenomenal, and it was great, because I kind of miss being able to go see businesses and doing that type of thing. So that was a lot of fun for me. And yeah, getting out of your office and seeing those customers and what they're doing, and I think it's also a nice shot in the arm. And you kind of mentioned this earlier. It's a nice shot in the arm for those businesses to see somebody looking at it who's interested in it and saying, "Hey, this is a good job you're doing here."
Yeah, it's a joy. Being in banking is such a joy. It's an honor to serve the businesses that we work with, even the ones that we don't get to work with. It's great having those conversations and making those connections, because you always come away with some little nugget of information that's going to make you better. It might make them better as far as their business, and it's all about sharing and actually showing that you care.
So last question for you, Keith. I'm in college. I'm looking at, possibly getting involved in community banking. What would you tell me? Are there things I should study? Are there things I should I be working as a teller in the summer? There are things like that to get me to understand, okay, this is what I could be getting into. And then are there particular degrees that help more than others? I probably don't want to take Latin as my major, or it doesn't really matter. I mean, enlighten us.
If you can go and get a summer job working in a bank as a teller or interning, just to kind of learn the systems, you might even want to approach a community bank and just say, I don't know if you're looking for some summer help. I really want to understand community banks. I want to understand. I think a lot of banks will probably take you under the wing and teach you on that from a community standpoint. The community bank will train you, will teach you a lot of things. In college, obviously, you're going to want to have some business courses in accounting, in finance. Those are going to be, really helpful as far as that. A lot of it is also going to be about relationships. So your communication skills are going to need to be there. As far as college degrees, everybody I've been in banking, nobody ever intended to get on banking. I find that more commercial lenders don't seem to always have, they may be English majors, but they're really good at math and they understand finance. But a lot of them don't seem to have the business degrees. It seems like a lot of us get trained on trial by fire and really develop into, boy, I should have studied that in college and gone in that route. So, in commercial lending, in that kind of world, in the sale, I am more of in a sales role in the realm of a business relationship manager. So my key is to make sure that the communication and the energy level is there, that you got to be really passionate to do this. That's a huge factor. If you can seek out classes in banking that your university offers, or go online. There's enough education out there right now that people will teach you about banking, so you can start to gain that knowledge, and you can speak intelligently, and you can show up. Geez, I've been taking these courses. They're all available online that you can start learning about business banking and about community banking and consumer lending. Those would be great avenues to put on a resume to say, I've taken the steps and I'm really want to break into this, and decide where you want to be in a bank. If you're not a salesperson and you're not a frontline person that wants to be in front of customers, maybe you want to be in, accounts payable, or maybe you want to be, the CFO, or maybe you want to get in human resources at a bank. All those are big, important jobs. And at a community bank, you're going to wear many, many different hats. And that's what gives you the huge advantage. When you're at Wells, like the big banks, the Wells Fargo's, the U.S. banks, they have abundance of opportunities throughout the world for you to grow. But you're going to be in that one little area to learn that job specifically, and you're probably not going to learn enough. You may have to stay in that for a certain period of time, and then you might get an opportunity to go over here, and you might go over here. But at a community bank, you're going to be able to have such a well-rounded background. It's a great starting place if you can get in. Even if you're just getting in and say, my desire is I want to be a credit analyst. Maybe you get in as a personal banker and just kind of learn the ropes, cut your teeth in there. Mm-hmm. That's a huge opportunity at a bank that you can show that, hey, I've taken these courses. Because just like any organization, we have openings that happen all the time. Mm-hmm. Some banks have more openings. And by the time you already kind of gain that knowledge, and you can show your enthusiasm to learn. Not everybody wants to be a banker anymore.
Right. Well, and go ahead. Sorry.
I mean, years ago, George, you would think, like you're watching A Wonderful Life, like George Bailey, a bank position was a pretty good, sizable position in the community.
Yeah, absolutely. It was a respected position.
Very well respected. Now, when the big banks, they hired a lot of young people, and they were on every street corner. There was a different mind shift in banking, and some of the bad press that has come out throughout the years has not made it the profession it once was. But like anything, it's an important job in the economy. It's an important job for the small businesses. It's important to the community for growth, that you really got to look at it as a great field to get into.
Yeah, and I think that's really good. And we see that in a lot of professions that, unfortunately, they're, and maybe it's just a trend in everything, but just kind of a lack of respect for professionals in differing areas, that you really have to have an extra level of passion. I mean, you have to have a good level of passion to be a successful community banker. I don't see how you do it any other way. You don't get motivated to get up and go meet somebody at 6:30 or 7 o'clock in the morning, do this and going, later in the evening, to go to another business and been working, the whole day. There's not banker hours. I'm married to a doctor. There aren't doctor hours either. I mean, there's probably at least an hour or more of paperwork to go with every hour that they're seeing patients. I mean, it's just crazy the amount of time a lot of things take, and our perceptions of a lot of these positions bear no resemblance to what the reality is today. No,
and my business card has my cell phone on it. So it tells you the availability that I have.
Yes.
So my customers know my cell phone. They know how to get a hold of me, and some are, I'll text and say, I want to text you. Okay. All right. Well, I have a question. Are you up? Well, sure, I'm up. What's happening? What are we doing? It's Sunday morning at 7 o'clock. I just had an idea.
and I, I'm a prickly or can be a prickly individual and all of that. But Keith here is definitely a person who, if you have the opportunity to talk with and get to know, is just an excellent individual. And whether he's in his business role or personal role, or in the case where I got to know Keith, helping to move our city together forward was just a great font of information and dedication to the community. And he's the kind of guy I'd love to have run for office, other than it would probably ruin him as an individual in his career. But I mean, but having, people in your community who have a great knowledge of what's going on and how things actually really work and what is beneficial is really important and really enriches your community. And I think people should really take a look at community banks and credit unions, and see what they're doing. They're not driving around in Ferraris and, taking your money home at night. They're really working to move the entire community forward. So I want to thank you, Keith, for all the work you've done. And again, thank you for joining us today and really helping to educate us on what a community banker does and really how it helps the entire fabric of the community.
Thank you so much, George, for having me. It was great. I can't wait to see your next episodes that come up. You're doing a fantastic job.
Well, we're trying, and it's just the conversations like this just make it so interesting and exciting for me. So thanks again, Keith.
Thank you.
Thank you for joining us today. Help us spread the word by telling your friends, family, and heck, even your frenemies that they can find us on iTunes, Spotify, Luminary, iHeartRadio, Stitcher, Google Podcasts, TuneIn Radio. Pretty much anywhere you can find a podcast, you're going to find Wimer's Wilderness. To learn more about us, go to wimerswilderness.org. Make sure to follow us on Facebook, Twitter, and Instagram at Wimer's Wilderness.